everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures market outlook for tomorrow's trading. That's going to be for the 13th. This is where we put together a plan of attack for tomorrow with what the information that the market is giving us for today. Now, in terms of the overall movement, I don't think really anybody was surprised about seeing today be a little bit slow. It's a nice weekend. Hopefully the weather was nice by you. I know it was by me. And coming in on a Monday with little to no news whatsoever, Australia down for a holiday, nothing really going on. And, well, it definitely followed through, I guess, in that sense, where we had a very slow market. Not much happened today, and, well, it definitely took its sweet time getting anywhere, and plenty of ranges all over the place for those of you who really love those ranges. Now, before we jump in, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign your email up so that we can send you an email every single time this video comes out. And in that email, we also talk about all kinds of different stuff, statistics and different markets that we're keeping an eye on, like stocks, sometimes options, cryptocurrencies, you name it, we're probably going to talk about it in there. So it's a great newsletter to get your hands on. Every single morning and every single afternoon, all day, every day, we post our live trader morning prep levels right before the room starts up, and that's going to give you all of the major levels of support and resistance that we're keeping an eye on for that day. And then also in the afternoon, we talk about either the market psychology of a specific market, or we go over a trade that we took that day in the room as an example, and just a way that you can kind of see what's going on, learn a little bit more, and add a little bit more to that tool belt. Now, if you haven't done so already, click on the live trader subscription and trial info. That's going to let you sign up for a one-day trial so you can sit down with us, see what we're all about, hang out with us for a day, and you know, see how we approach the markets. A lot of times, especially on days like today where it's a little bit slow, we definitely don't idle that time away. We spend a lot of time going over different questions that members have, and it's just an overall great experience. If you haven't done so already, make sure to check that out. And of course, if you do enjoy it, you can sign up for a monthly or weekly subscription to that. And if you join as a live VIP member, then you get access to the live trade room as part of the package. Now, the euro, for the most part, really didn't get a whole lot done. We had a big move to the upside for most of the day, but it gave it back going into the afternoon, and then we're ending kind of flat. We opened up right here, and we're going to be closing right about there. And that is a very ugly-looking daily candle. Lots of wick on the bottom. Lots of wick on the highs, most of the wick on the top, in fact. This is going to be a bear candle. So if anything, on the daily side of things, the market will likely see this as a pretty bearish rejection of the highs, and it may allow sellers to try to come in for a little bit of a longer term move. Overall, though, pretty much arranged. If we zoom out, we can see that that does kind of follow along with the overall trend of not really much of a trend, right? A little bit bearish over the past couple days, sideways to bear. If we go back a little further, we really haven't gone anywhere for quite a while, except if we go all the way back to mid-May, where we had that nice bullish rallying to the upside. Since then, though, really haven't left this area. So the big picture really is range-bound. We're seeing that on the faster time frame. We're seeing everything pointing to not really much of a trend at all. So the way that we're setting up right now, we are cycling off of the lows of the range. The lows of the range between 12,020 down to 11,995 look pretty good. At the middle of the kind of scenario that we have here, with lots of support and resistance at around 12,160 to 12,210. And then, of course, the highs of the range, 12,275 to 80, up to 12,305. That whole kind of zone is anticipated to find a good amount of support and resistance. And given that we do have a prior bullish trend going into this range, I would prefer to be a buyer at the lows, but we've been so far detached. It's been so much time since we actually had that continuation trend to the upside back in mid-May that it's not really going to make much of a difference in terms of impact anymore. So I'm totally fine going long. I'm totally fine going short. We're pretty much just in a range, and we're looking to fade. So buy low, sell high, and stay out of the middle, and we know how to treat that in terms of ranges. Now, when we're looking at gold, gold hasn't really accomplished much either. Another type of range sort of day. We opened up right here, and we are going to be closing right around here. So it's a pretty good daily candle. But once again, lots of wick on the bottom, lots of wick on the top, and just overall, this one especially, even though this is a bare body, it's not going to be much more than maybe a spinning top, if you want to use the fancy terms. There's not really a whole lot going on today. We pushed into a new high, then a new low, then a new high, and then a new low. We're probably going to either make one more new low and then rally to the highs, or work our way to a new high again before we start seeing some potential breakout up or down. Now, just like we were talking about with the euro, we know what to do with ranges: buy low, sell high, stay out of the middle. But it's important to know what the general bias is. And the general bias since, well, early June has been bearish. We haven't stopped falling. So that's the emphasis that we have to place on this, is it's going to be better to be a seller. Now, I would love to see the market come back to this little double bottom. They broke out, retested it to the tick right there. If we can get a rally back up, that would be a break of the range highs and a retest of that level. That area at around 73 would be phenomenal for potential shorting opportunities to drive the market down. And then while we sit on these lows, of course, we could look at potential buying opportunities, even in the face of that bear trend. But generally speaking, when you have a trend in place, that gives you a bias. So when you have a range, if you're looking at that range and you have a downward bias that's been working its way lower the entire time, you would prefer to be a seller. If you are going to be a buyer, you would prefer to see the market break down a little ways and then look to buy somewhere down here, right? Give yourself a little bit of an offset of that range low so you have a built-in sort of buffer. And that's kind of the situation that we see right now. We have an overall bear trend working lower. I would rather sell the highs if possible, given all of the levels kind of stacking up on one another. And if we are going to look to buy, I would want to see a break of the lows down at around maybe 1265, maybe a little bit lower, 64.5, somewhere around there, before we start looking at buying opportunities off the low. On crude oil, we had a big spike to the upside, and they gave it all back going into the end of the day. Now, we are going to still have a pretty strong bullish day on the daily. Well, I say strong. This is going to be the daily candle. It is closing bullish, very little wick on the bottom, and a huge amount of wick on the top, but we still closed bullish. This is all still a bull candle. So it's not necessarily super strong, but the fact that they were able to hang on and close this as a bull candle does say a lot about the emphasis of the buyers. One big thing to keep an eye out whenever you're looking at these major levels is buyers don't necessarily want to buy way up here if there isn't enough conviction. And that conviction kind of dried up on that third test at the top, and it started falling back down. So buyers now are going to be looking for much better prices if possible, and that puts us at a decent buy at 45.88, and that's also weekly support at 45.90. So everything kind of stacking up in the same place there for a potential buying opportunity. Now, because this has pulled back so deeply, if we do start rallying to the highs, it's assumed that the buyers are going to more look for a retest of the highs rather than a breakout and continuation of the highs. It makes a lot more sense that buyers have been building into a position. They start realizing, this isn't looking that good. If we go back to the highs, I'm just going to exit. And then you end up with a near double top, somewhere below it, somewhere above it, something like this. In that area is going to be a big area of interest. Now, on the way up, we do have some levels of resistance to work with. A triple bottom that formed here, broke down, retested. That's going to be at 46.36, 46.44 as well. And then we start going towards the highs at 46.56 and 46.68. All areas of resistance to keep our eyes on. Again, overall, we gave back a lot of ground, and we are still bearish in the bigger picture. One thing that we've been talking about for a while now that I would love to see is a pushback into this area of interest, and they just missed it, right? Just missed that location. That's a big swing low, kind of that wedge forming through here. That massive breakout that they had, coming back to that area of interest to see if the sellers want to defend it. And given the fact that they're already defending it and we haven't even tested it yet, gives me a lot of emphasis to the downside still. So I would love to sell some moves back up into 36, 44, 56, 68, even further up. Would be some phenomenal potential longer term sells we may be able to sink our teeth into. And then finally, the S&P, out of all the markets, probably the most range bound, not really accomplishing a whole lot. We did open up right here, and we are going to be closing right here. Another big giveaway type day. They pushed way down and gave almost all of it back, closing near the highs. Still a bearish candle overall, but not really much of one, mostly just a big doji. And for the most part, just like all of the other ranges, buy low, sell high, stay out of the middle, and we should be okay to go. Now, we do have a slight little wedge forming here. We can see the highs are slightly less aggressive than the lows. The highs kind of angling down at a very minor slope versus the highs. And if we go out a little further, we can see we want to get a general emphasis, and there really isn't one, right? Mostly range bound. We had this very sturdy range for about a week. They tried breaking out of it, and we're now coming back and retesting that level as resistance. If they can't start getting a drop going, we're going to run into some trouble here. So the sellers are really going to need to kick in high gear and drop this market. Otherwise, we could find ourselves right back in that original range and even pushing back up towards those highs again. So the sellers, they need to prove something. Otherwise, we're going to have a little bit of a problem. But still, we're dealing with a range. Buy low, sell high, stay out of the middle. And right now, we're kind of towards the highs, at least in the shorter term. May be able to find some selling opportunities. 24.27.5 would be around those highs. A little bit lower at 24.18 3/4. If we zoom really far out, we still have those areas of resistance from last week at 31.5 and 36 3/4. So plenty of levels to work with in terms of the sell side for potential bounces, maybe medium to long-term trades, maybe even short-term little scalps. Either way, though, we're in a range and we have to treat it that way. So that's going to be the outlook. Now, taking a look at the news, there's not really a whole lot going on tomorrow, but at least more than today. Tomorrow we do have some decent news. Out of the UK at 4:30 in the morning, we have the CPI year over year, forecasted at 2.7%. That is the same as previous. At 5 o'clock, out of Germany, we have the German ZEW economic sentiment for June. That's forecasted at 21.5. Previous was 20.6. And then for the U.S. session, 8:30 Eastern time, we have the PPI month over month for May, forecasted at 0.1%. Previous was 0.5%. That's really it, though. Not a whole lot of news for tomorrow, but hey, at least we have something on the calendar to work with instead of a holiday and medium to low nothing for the rest of the day. So as always, like we say, play it safe going into tomorrow. We are coming off of a relatively decent heat wave, and I know the weather is nice in a lot of places. A lot of folks might just be hanging out at the beach, but we do have some news for tomorrow to keep things moving. Fingers crossed we get that movement tomorrow. It'd be a little bit of a refresher. So, that's going to do it for today. If you have any questions about it, as always, you can send me an email, jbrink@slingshotfutures.com. Like we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see you all then.